it just stops you jumping into buys and then into sells and then into buys and then into sells and then into buys. It's just a regression channel, guys. It's a stock indicator in your trading view. And what you're trying to do is you're trying to trade premiums or discounts. Now, we've kind of mentioned this many times before. Mike mentioned it as well the other day when we were talking about it in classroom. The price is an advert. It's not value, guys. Price can never be value. Now, when you think about it from a profile aspect, you might say that's not correct because profile guys say if you're above the POC, you've got value. Yeah, we get that. We understand that part of the jigsaw puzzle. So what the regression channel does is just tell us what the trend is. Now, for a lot of people, that's actually quite useful. It takes one piece of the analysis out of the requirements to work on. It takes one piece of the analysis out, right? So in that type of situation, you don't have to start thinking to yourself, am I bullish or am I bearish? Do I want to buy this or do I want to sell it? The regression channel pointing up inside of a green line rising, you can see the moving average here for the regression channel. Inside of that channel there, I want to buy discounts. So where's a discount, guys? Well, a discount is very obvious. Take a look at a discount. Where's a discount on that chart as this line goes green? Well, discounts are any time the purple line makes a lower low. So there was a discount here. Yes? Would you agree with that? There was a discount here. It's a lower low. Relative value, lower low. There was a discount here. Relative value, lower low. I'm questioning whether there was a discount here or here. But this certainly had a lower low against the prior discount. So, yeah, I could take it. I'm certainly going to take it anyway. This had a lower low here. So there was a discount there, right? This had a lower low. So there was a discount here. These are all potential discounts, yes? So every single one of these has a discount price. This is the NASDAQ against the S&P as a value line, remember. It's not price that's discounted. It's the NASDAQ against the S&P that's discounted, right? So price has got nothing to do with this question. The price becomes part of the question when we start trying to figure out whether we've got buyers above us or whether we're actually bidding into the high price. We don't want to be bidding into the high price, right? Now, one of the ways we can actually work on this as a potential storyline is very simple, very straightforward. We can look at the NASDAQ against the YM as well. So if we look at the NASDAQ YM, we would rather make sure that the green line isn't divergent from the purple line. If we're good on that, we're good to go. So if we're good on that, we're good to go. So this purple line is making a lower low. The NASDAQ YM isn't, so that looks a good trade to me. That looks like a good trade. That's good. This is good. This is okay. This is okay. This is okay. This is okay. So these trades are all okay. Now, if you took those buy trades based on that little process, just those buy trades, how would you have performed? I don't know, because we weren't looking at the NASDAQ, right? We weren't actually looking at the NASDAQ prices. So how would you have performed if you got fills on all of those trades? Would you have made any money? Well, we would have been buying on that candle there. We would have bought into that candle there. So that's never going to be a buy trade, is it? Because that's the high price. You're never going to buy that because there's no value above you. So that's never going to be a buy trade. You're not going to buy that candle either because it's also into a high price. So that's not going to be any value in that trade. You're definitely going to bid this one. This one's okay. This one is very, very close to the high. So I'm probably not going to bid that one either. Those would be your three trades. Did you make money? Did you make money? Yeah, you made easy money. If you got filled at 95s, you traded 09s, you made yourself 14 points, $280. How long did it take you to make $280? 1 minute, 30 seconds. 1 minute, 30 seconds. Not bad, right? Not bad at all. So when we get into that as an exercise, the first thing you do is forget about the depth of market, forget about your charts, and just try and recognize whether you'll be trading or not. Take off the price. Don't get taken into whether the price, remember, is if you're into a high price, you don't take a trade because you don't have any buyers above you or sellers below you. So don't take the trade if you're into a high price. But other than that, you can see that the slope of the line doesn't change color. Try and stick with the slope of the line. Try and stick with the direction of the regression. You can see we've got a red slope, but we've got a bullish regression just now. That's a difference of opinion in price, right? So that's not going to be a trade. When we've got a green slope and a positive regression, we start using this NASDAQ S&P, okay? So when we've got a green line coming into the markets here, that's a lower low. That's going to be a buy print there. It might be into a high price. We don't take it. If it's into a downtick, we take it. With the green line still positive, we could look at buying into that regression there, that discount there, and we could buy into that discount price there. As this line goes red and this is still positive, we want to be very cautious. It turns up a little bit green there, so obviously buying into that price could have been a little bit of a possible trade, but obviously you're not really liking it because the slope is now starting to change shape and color. So those are really your only two trades right now, is those two trades. If you're going to buy this, you're going to buy deeper discounts now. You're going to make sure you're buying these deeper discounts into these kind of areas here. You're going to buy these deeper discounts into these areas. But I'm not buying this just now because the red line is now on your screens. I am not taking a buy trade anymore. With the red line on the screens and the regression channel starting to turn down, I'm more inclined to start selling higher highs on the purple line. Just get into pointing them out, guys. You're not having to trade them. Just point them out because you're not seeing price. If you think you're getting caught by the color of the volume candles, take the volume candles off the charts, right? Take the volume candles off the charts. A higher high in the purple line is a sell trade. A higher high in the purple line is a sell trade. So just get ready to sell it. Just so instead of putting in a sell arrow, you'd start putting in sell orders, right? Possible sell trade coming up. Sell trade, right? Sell trade. Put an offer in. Put an offer in. Put an offer in. Not at the current price. 1 or 2 ticks above the current price. Try and get that offer on the books. Another higher high. Red line is still in place. Put an offer in. Put an offer in. 1 or 2 ticks higher still. Put an offer in. If it's into a low price, you wouldn't put an offer in, correct? You wouldn't put an offer in. Now remember, this is taking away from the fact that we don't have the green line on the charts as well, so we'd obviously be aware if the green line's trading at a premium, we don't really want to take those trades, but you get the basic idea. We have that extra quality to this. This is just an exercise to get into the speed and the habit of what you're looking for. If we take those as possible trades, did you make any possible trade decisions? Could you have made any money on those trades? Well, that sell was into a low price. That's never going to be a sell. This sell was into a low price. That's not going to be a sell. This sell was into a high price. That's a perfect sell. This sell was into a low price. That would never be a sell. And this sell trade, well, it was on a pullback. So, yep, I could probably get away with a sell there. So if you got filled in that sell and you got filled in that sell, you made some nice profits, correct? So you can see that when you start looking at value, and you start looking at where the price actually is, so that you add in the price value narrative, you can start to see that you're not held by simply prices making higher highs or higher lows. It's all about the value, as Mike rightly mentioned. It's all about the value. The value is what you're trading. The price is what you get when you trade the value, right? So when we actually start recognizing those as stories, you can see that the use of the charts becomes useful, but only after you've made sure that you understand what it is you're trading. So the reg's going up, the green line's going up, so I want to buy lower lows on the purple line. So I want to buy lower lows in the purple line. There's a good drop candle there, so that would be a great candle to buy into. You can see that we get a big drop on the purple line here, but look at what the price is. It's into the swing high. That's never going to be a buy trade, correct? So that's not going to be a buy trade, so we move on. There's a lower low, but that's into a swing high as well. That's not going to be a buy trade. There's a lower low, so that's going to be a real possible buy trade there, which has just happened, literally. Can you see where the trades are starting to come through? Can you see where your opportunities were to start? Look at what's just happened, guys. Look at that buy trade. 11s just traded 16s. Now, I'm not saying you would have got filled at 11s, but at least you are giving yourself the right trade at the right probability in the right area, correct? Yes or no? Absolutely. Remember, if this was a spread, what would actually be getting done, guys? If this was the institutional algorithm, what would actually be happening here, Sebastian? What would actually be happening? You'd be buying the NASDAQ, but what else would you be doing? Just because the Nasdaq's cheap against the S&P doesn't mean the Nasdaq's right to be buying into the low price. So what the institution would be doing in these types of environments here is they would actually be selling the S&P and buying the Nasdaq here. They'd be selling the S&P and buying the Nasdaq, right? So they would bid the downtick on the Nasdaq, they'd sell the uptick in the S&P, they'd bid the downtick in the Nasdaq, they'd sell the S&P and the uptick, and the algorithm would basically chop into the buy and the sell side, right? So what you're doing is you're basically taking away the spread part of this trade, just the same way as Charlie D told you. Every trade you take is effectively a spread, whether you like it or not. Every trade you take is a spread, right? If I trade gold in the gold charts, I'm not actually just trading the gold. If you think about it as a spread, I'm buying gold and selling silver. I'm buying gold and selling copper. I'm buying gold and selling bonds. I'm buying gold and selling Japanese yen. Those types of spreads is what actually are happening in the institutional space. It's called relative value arbitrage or statistical arbitrage, correct? So we can start to recognize that this is part and parcel of institutional trading on a second-by-second basis. So when the green line starts sloping up, what are you going to do? You're going to buy the spikes to the downside. There's a spike to the downside. It's on a reasonable down candle. You definitely got filled in that one because the price went lower for the next 3 seconds, and then it rallied. So that's okay. That's a good fill. You've got a lower low here, so you'd have definitely been buying that one. Not so sure about these lower lows here. Not so sure about this. Not so sure about this. This is a lower low, so you'd definitely be bidding into that one as well. So there's another buy trade there. Would you agree that these are all possible buy opportunities? Did you make money on them? Absolutely did, right? You absolutely made money on them. This was a lower low. You bid into that trade there as well. Look at this money, guys. Look at how easy it is to make money on these. Now, why would you not bid this one? Why did you not bid this one here? Why was this not your opportunity to buy here? You're literally one tick away from the high of the swing, aren't you? So the opportunity to buy into that is zero. That is not a buy trade. It never will be a buy trade. So obviously this is where knowledge of where price is advertising is also useful. But it's not part of the initial exercise, because the initial exercise is just, first of all, recognizing that you have a technical setup, a market-making setup that you can take advantage of at that stage, you understand? You just want to recognize that you've got a technical signal that you can play into. And when the regression channel differs, from the line, you just stop trading, you take a break. Red line on the moving average, still upside on the regression channel, stop trading. Stop trading. You know the red line moves faster than the regression channel, so obviously you just stop. And if the red line ever turns back into a green line, you're ready to go again, right? You're ready to go again. Does this make sense to everybody that's watching? All we've got here, guys, is the Nasdaq against the S&P in purple. We've got a regression channel against the Nasdaq on the charts. We've got the Nasdaq on the charts. And all we're doing is trading discounts to the S&P in the direction of the S&P trend, in the direction of the price trend. And we're trying to make sure the price has a discount, and we're just executing into a discount phase. If it agrees with the regression, if it agrees with everything else, look at the phase we've just avoided. Is that not a good phase to avoid? It's gone nowhere, right? But let's take a look at the trades that we could have had in an earlier swing. Take a look at these trades that we were calling as they were happening, yes? Now, we didn't call this one as it happened, but we started to call these as they happened. Look at this trade, guys. 14 to 24. That's a $200 up move. It only took you 1 minute 30 seconds to make $200 per contract on that up phase of the marketplace. That's a pretty good outcome, right? Faster than a flashing blade. Crazy good, right? Crazy good. Now remember, the first exercise is simply to put in arrows. The second exercise is instead of putting in arrows, put in bids, put in offers, put in bids, put in offers. Don't worry about profit and losses. Don't worry about managing the position. Don't worry about building into a position. Just put in bids and offers instead of putting in arrows, and start translating the left-hand side of the screens into the actual depth of markets here, so that you can start to recognize the simple elements of what's going on. Now remember, this is the NASDAQ S&P. This is not gold, remember that. So this is the NASDAQ S&P. So you can see whether we have any opportunities to deal. We can start looking at some of these narratives, and we simply are trading the purple line if we see the purple line. So the purple line is premium tier, but it's gone green, so that's not of any use to me. All I'm looking for is to trade the purple line, guys. That's all I'm trading, the purple line in the direction of the regs. So there's a bit of a purple line discount here, but it's into the high price, so that's not going to be a trade. So we're getting a big drop off here. Purple line's not in the game. We've got a red line coming in. The reg line's very flat. So if the red line goes very flat, if the reg channel's very flat, you shouldn't really be dealing unless you're trading into these extreme areas as a market maker. So you just find where your extremes are. These are the only prices you'll trade when it goes flat like this. These are the only prices you'll trade when it goes flat like this. And you'll wait for the value to start building again on a directional swing. And then you start bidding into directional one-way money. And then you'll start offering into a directional one-way money. And you'll just keep trying to trade these ideas, right? You'll just keep trying to trade these ideas. And look at what's happened there. See what happened? They ran the stops because it went sideways in the channel. They ran all that liquidity into that trade, and you would have been able to work a sell trade against that narrative perhaps. And then they ran the stops on the downswing here, and you'd have been able to buy the stops on that swing there. You'd just managed to swing the 28s down to the 13s, back into value. Now we've got a reg channel that's going down. The purple line is starting to rise on an uptick. I like the sell now. I like the idea of getting short. You can see that that was a very nice short that we just shouted there at 16s. It's already dropped down to 8s. You see that sell, guys? Yes? You see that very nice sell just in there? Very nice indeed. It's about 4 ticks away from the lows. The value looks great. The channel's now downside. The red line is now downside. It's sell side only business, guys. Higher highs in the purple line. Higher highs in the purple line, so long as it's not into the bottom 2 or 3 ticks, is a sell opportunity. And it's a sell opportunity if you get a higher high on the purple line. That's why this is not a sell opportunity here. Because whilst you got a higher high on the purple line and it looks good, you're still selling into basically the low price. And that means that value-wise, you're not seeing perhaps an awful lot of sell-side sellers coming in at lower prices. So you're having to be very careful about selling into that lower price there. That doesn't look like a good trade to me. Doesn't look like a good trade. The purple line is the NASDAQ S&P.